Hello there. Welcome to Great Living Accounting. In this video, we want to look at the topic of cost accounting, and we're going to look at the questions from the past exam paper. And this question one on that question paper, and it reads: give one term of each of the following description by choosing a cost category next to the question numbers, that is 1.1.1, 1.1.4 in the answer book. And then we are given the responses that were given in this box, and then also we need to go through the questions that we have there. We are going to relate every expense that we are given there to a description that we have in the box that we have there. So if you look at the first one, which is 1.1.1, it reads salary of the factored foreman. So we are going to look at what classification can we put this salary of the factored foreman under. Remember, we've got selling and distribution cost as one of the options, direct labor cost, and also direct material cost, administration cost, and we've got factor overhead cost. So you see that according to the options that we are given there, what relates to salary of the factor foreman is our factor overhead cost. So what we are saying is we come here, we just write in front of that this is a factor overhead cost. So we are saying factor overhead costs. So this is what we have in terms of our 1.1.1. Then next one, 1.1.2, bad debts. I would say that bad debts is a selling and distribution costs. And remember, bad debts they are created when we sell our goods on credit to our customers, they become our debtors. But when these customers are unable to pay back our money, that's why we're going to write them off as our bad debts. So you see that we classify it under selling, selling and distribution. So we are saying selling. Selling and distribution is the response that we have. Then stationery and telephone expenses. Remember, these are charged at the administration. So obviously they're going to become our administration costs over here. Then last, the next which is 1.1.4, which is wages paid to workers in the production process. So remember, this is a direct cost. So obviously it's going to be a direct labor cost since I say payment wages to workers. So it becomes a direct labor cost. So here we have got direct labor. So we're saying direct labor costs. So this is the response that we have according to the information that were given on the first part of the question. So we can go again to see what we have on the 1.2. So on 1.2, it reads the Kardashian manufacturers. Then we are given Kardashian manufacturers produces tennis balls, which are supplied to local schools and retailers in the area. Financial year ends on 28 or 29 February each year. So all the required parts we are going to 2.1 reads calculate the following for the financial year. So we are given the first item, which is direct material costs. It's got 7 months, and then direct labor cost with 5 months. So we're going to start with our direct material cost, which is 7 months. So we go to our question to try to see what do we have in terms of details that we are given that can lead us to the calculation of direct material costs. So let's just try to assume so that we can be able to see. So you'll see that this is the information that we are given in terms of that can lead us to calculate the figure for direct material cost. But you see that we are given stock balances on 1 March 2021 and then on 24 2022, which means this is going, these are going to be our opening balances. So we are going to say our opening balances are here, and obviously this will become our closing balances. So what you're going to do is you're going to see that on B information B there are transactions for the we are given other information that we are given there. So if you go down the information, you see that the only formula that we can employ there so that we can find our direct material costs, we are just going to use the same formula that we use on the calculation of cost of goods sold. So what we are trying to say is we are going to say our opening stock of raw materials, and then we add any purchases that we have on raw materials. If we have got any returns of purchases, you're going to subtract the purchases and returns of raw materials, and then if we have got any carriages or transportation costs of those raw materials we add. So we're just going to say add any carriages or transportation costs that we have. And then obviously we are now going to subtract your closing stock of your raw material. So this information we have it according to that information that we are given. So if you come here, you see that remember we are saying these are opening balances on 1 March 2021. So what we are going to say is we are only going to concentrate on the raw materials section. So what we are saying is this is going to be our opening for raw materials opening balance, and then this one becomes our closing balance of 38,700. And then in terms of our purchases, we're going to find it in the additional information that we are given beneath that. You come here, see that we are given raw materials for 340,700 rands was purchased on credit. So these are credit purchases. In other words, we are saying these are credit purchases. And obviously, we also have our cash purchases here. This one is representing our cash purchases. Then here, the second point is saying damaged raw materials worth 15,700 was sent back to the creditors. So remember, these are purchase returns. These are purchase returns. So if you go down again, you see that the next point is saying delivered cost on purchase of raw materials 19,400 rand. So these are the transportation costs which are we are going to represent them as our carriages. So these are carriages on purchases. Carriages on purchases. And then I will try to classify the other one that we have there. Let's see what is it saying. Saying total effect on overheads for the year amounted to 273,340. This is not going to be part of the calculation of our direct material cost. So having classified this transaction that we are given, we can now easily go and find the final figure that we have for direct material cost. So we are just going to use the formula that we have there, and that is our opening that we set there at the beginning, that we said opening stock plus purchases minus purchases plus our carriages, they are there, then minus closing stock. So basically we can just try to summarize as such. So we are saying our opening stock we're given is at 23,400. So we are saying going to say 23,400, and then we are going to add our purchases. Remember, we have got credit purchases and cash purchases. So it means we are going to add both of them to get our total purchases. So what we are saying is credit purchases, we are having it here is 340,600, and then cash purchases are 155,000. So we are going to add the two. So we are going to say our 342,600 342,600 is our credit purchases. When the cash purchases, remember we are having it here is 155,000. So 155,000. And then obviously now we have our purchase. Then our purchase returns, remember, we have highlighted them here at the second point, so we can try to see what we have in terms of the amount of our purchase returns, which is 15,700. So we are going to subtract it. Remember, purchase returns there, subtracting. If you come here, you see that purchase return we are subtracting. So we are saying minus your 15,700. And then I will look for our carriages. Our carriages are the transportation costs. So if you come here, transportation costs, we come here, check there. Remember, it's we went the second from last point, we said delivered cost on purchase for materials 19,400, which is our carriages. So we are going to add that one 19,400. See, again here we add our 19,400. And obviously now lastly we put so we have subject our closing stock. Then our closing stock, obviously we have it there again in the list of balances, whereby we are saying closing stock of raw materials is 38,700. So we're going to subtract it. Okay. Subtract 38,700. So we calculate it as such. So obviously when you do the calculations there correctly, you are going to get your answer is 486,000. So we are saying 186,000. So this figure becomes your direct material cost. So we are saying this is direct material cost. So this is what we have in terms of the calculation of direct material cost. So if you come here, you see that the second part of the question is saying a direct labor cost, calculation of direct labor cost, which is our 5 months. So we come again on additional information. And if you come to additional information C, we are given details of workers in production. These are the details that we are going to lead us to the calculation of direct labor cost. So we are got a number of workers, we've got 4, and then normal hours worked here. The normal hours worked, this is what's supposed to be there. The normal hours worked, we've got 1,440 hours, and this is going to represent per worker. Per worker. So this is 1,440 hours per worker. So and then we are given per worker per year, which is the annual figure that we have. Then normal time estimated contract, we've got 40 hours per week, which is 45 weeks per year. And then we've got normal time rate, which is 35 rands per hour. Then total overtime hours worked, 640 hours, and overtime paid for 33,600 rands. So on the calculation now of direct labor cost, so we are saying we've got 4 workers, each one working 1,440 hours. So firstly, we have to find the total number of hours worked, the total number of hours worked, since we are having 1,440 per hour, which means 1,440 hours per worker. So for four workers, we're going to say 4 times 1,440. So basically, we can just try to present it as such. So we come here. We are now saying 4 times 1,440 hours. We are going to get the total hours for all the 4 workers. So when you calculate that, you also have to calculate with the rate per hour for normal hours. Because remember, these are 1,440 are representing normal hours. So the normal rate that we have is 35 rand per hour. So we're going to multiply by 35 rand so that we get the value. So if you multiply by 35, here, see that the answer that you are supposed to get there is 201,600. Then from there, we go down there. We have put some additional information that we are given in terms of our contributions. The business contributes 1% to the UIF and 9% of the pension fund on behalf of all employees. So what does it mean? We're going to say 1% plus 9%. We're going to get to 10%. And this one is would be times your normal wage, so that you get your contribution. So we're going to say 10% of the normal wage, or this normal wage is the one that we have already calculated then. So we are going to say 10%, 10%, which is 10 over 100, 10 over 100, then you multiply by the figure that we have there, which is 201,600 over 1. Calculate like that, you're going to get your 20,000, 20,160. So this is what we have. And then on the last part, we have what overtime, of which overtime we're given it as a calculated figure there, which is our 33,600. If you come in, you see that our overtime is 33,600. So we just come here and put our overtime. So just come here and say overtime is equal to 33,600. So this is what we have. Then if you add there, you are going to get total now. So let's try to add by saying 201,600 plus 20,160 plus 30,600. You're going to get 255,306. So this is the total direct labor cost. So this is what we have, guys. According to this video, those who will subscribe, please subscribe and share ways to come into more videos. As for this video, I'm signing out.